Hello, hello. Thank you so much for joining us today. We're so happy to have you all here with us for a very special webinar. Today, we are navigating surrogacy insurance in 2026 with our lovely guest, ArtRisk CEO, Sarah Paige. Sarah, thank you so much for joining us today. My name is Kimberly Flores, and I serve as one of the department managers here for our case management department at ACRC Surrogacy. I have the privilege of guiding our surrogates and intended parents through key milestones in their journey, and I am very truly excited to be joining today's session. This webinar is designed specifically for intended parents who want to better understand the major insurance changes coming to the surrogacy landscape in 2026. Whether you're just at the beginning of your journey, trying to explore your path to parenthood, or you're already working with a clinic and our agency, our goal is to offer clear, practical guidelines to help you make informed decisions with confidence. We'll be covering topics such as the challenges emerging with Anthem in California, how lien-based plans like Blue Shield and Kaiser can impact overall budgeting, and when commercial coverage options such as Lloyd's of London are typically used. Sarah will also explain what these changes mean for intended parents, whether California remains the strongest state choice, and how insurance structures differ across the United States. We want to be as informative as possible and also help a supportive hand, make this a welcoming space. So please do make sure that if you are attending today's webinar, you do ask us any questions at any time using the Q&A box at the bottom of your screen. We will leave time at the end of our webinar to go ahead and answer as many questions as possible. Before we get started, I know I've spoken a lot about myself. I do want to take a little bit of time just to give some background information about our agency, ACRC Global. We were founded in 2015, and our headquarters are in Irvine, California. We specialize in global surrogacy, and we are dedicated to helping individuals and couples achieve their dream of parenthood through compassionate, transparent, and ethical family building journeys. In addition to surrogacy, ACRC offers gamete donation programs and IVF transportation services, which provide seamless support through the entire process. With offices and trusted partners around the world, our team delivers personalized care, medical coordination, and legal guidance to ensure both intended parents and surrogates feel supported every step of the way. Our mission is to make growing families through assisted reproduction a positive, informative, and empowering experience for everyone involved. Last and final, we do offer free consultation. So if you go ahead and scan the QR code that is on your screen at this moment, you will be prompted to our scheduling services to go ahead and speak to one of our team members to further discuss any plans that you may need for your family building. Now, before we dive into the discussion fully, I do also want to let you know that today's webinar, if today's webinar sparks any sort of additional questions for you, and you do feel ready to take the next step, we would be more than happy to connect with you one-on-one. As mentioned, we do offer the complimentary consultations where you can speak directly with our team. Alternatively, if you'd like to visit our website just for some general information, our website is acrcglobal.com. Alrighty, thank you so much for listening to me. We are all ready to begin here. So as I mentioned, we have the pleasure of hosting Miss Sarah Paige, CEO at ArtRisk Solutions. Sarah, would you tell us a little bit about yourself?
Sure. Always happy to do so.
Tell me about you. Tell me about you.
I like penguins. I'm just kidding.
What's
I'll
your
give you
favorite
random facts.
color? What's your coffee order,
Exactly. It's
Sarah?
blue. So I am the sitting CEO of ArtRisk Financial Insurance Solutions, and I've recently stepped into that role in August. Prior to that, I was the COO. I have been with ArtRisk Solutions for 15 years. I did not get my start in insurance. I got my start actually in education, and I used to teach elementary education, emphasizing in math and history, which is fun. I really enjoyed it and felt I actually liked business a lot. And so I started working for Art Risk on a very, very temporary basis and fell in love with this community and the people in it and the families that we got to help and stayed. And since then, my goal is to always educate people, which is why I love that ACRC is doing this webinar, because I think that's incredibly important to get good information out there. So I didn't stray very far away from the teaching aspect. I still do this on a very regular basis. And then outside of that, I believe in making change. And so I'm heavily involved in organizations that promote ethical surrogacy, as well as making some legislative changes that will help more families access care. That's me in a nutshell.
Amazing. I always say, I think the career that you're meant to have ends up finding you somehow. It's like you start somewhere and then kind of pivot
Yes.
into what you're meant to be in, right?
Yes, 100%.
I
I
think that's
agree.
true for most of us.
Yes.
Alrighty. Well, thank you so much, Sarah. Like I said, we are so happy to have you here with us and provide all of your knowledge because, as we are aware, insurance is very tricky to the common
Mhm.
person. I think you get a lot of terms thrown at you, so we really do value your, yourself and your team's expertise just to help us kind of
Thank you.
navigate through all of the trickiness that is insurance.
Yeah.
Alrighty, so we're going to jump right into our Q&A session. We'll address kind of some of the most common questions that we've been seeing from our intended
Hmm.
parents, just to navigate, especially because we are in that open enrollment period now. So a lot of
Mm,
those questionings are starting to
yes.
come up. So I'm going to go ahead and start with some. And again, everyone who is live present today, if you do have any more specific questions that you don't feel we're touching on, feel free to drop them in the Q&A box at the bottom of your screen. We are going to take some time to grab those personal questions and just pick Sarah's brain while we have her. Alrighty. So first question that I think is on everyone's mind right now. What major changes does California currently, or is California currently undergoing in terms of 2026
Hmm.
insurance coverage?
Yeah, so we had a big shift this year. California typically has had probably two to three different carriers, insurance carriers that um, were good for surrogacy, didn't have what we call a lien, which is an insurance company's right to seek some reimbursement on medical expenses. And this year we found ourselves only having one, which is different. We usually, again, historically, we've had two to three. And in addition to that, that one carrier that we have that doesn't have that extra reimbursement language does not allow a surrogate to have any other insurance. So if she is on TRICARE or if she is utilizing employer-based insurance, you cannot access this other insurance that would be very good for surrogacy. And so we have found a lot of people figuring out what to do. And I love that you mentioned lean plans and I love that you mentioned Lloyd's, because both of those need to start being talked about more as options and alternatives to what we've been able to do in the past.
Right. Are you guys seeing any states aside from California that are adopting like a similar policy or structure as well?
So we have a couple other states that do this. Oregon is one of them, Washington. We see a couple in Colorado, and we have, Ohio has a little bit of it too. The state that I think is more impacted in what we're seeing, and also I forgot, but Utah is another one. I would say Utah is being heavily impacted by it right now. We're seeing, and then Washington is another big impact. Those are probably my two other states that we've had some really big shifts this year, where we've had to again look at some alternatives that we typically wouldn't have had to look at in years past.
Got it. And then I know you mentioned Anthem kind of being that big provider.
Yeah.
Aside from, I mean, is it really the reason why Anthem has been widely used in the past? Did they have less restrictions, or kind of why was it that Anthem was the go-to for the
Yeah,
option?
Anthem historically has been a very, very, very surrogacy friendly insurance company. We have been working with them since the inception of the Affordable Care Act, which was in 2013. So over 12 years that we've been working with them. They are a great company. What we're struggling with is, and I know we get into this in the next question, so I won't go too much into it. But
Yeah.
what we're struggling with is the HMO aspect of Anthem. So Anthem on an I'm kind of getting technical right now, so bear with me, but there's three different types of policies. You have your preferred provider organization, which is your PPO. You can go see pretty much any doctor. You don't have to get referrals. You have out of network coverage. It's a great policy. Then you have your EPO, which is an exclusive provider organization. And that doesn't have any out of network benefits, but it does, but you don't have to get a referral. So I always tell people it's like a marriage between a PPO
Right.
and then an HMO. And your HMO is where you have to get referrals, you have to stay within a medical group. And there are specific counties in California that only have an HMO. And so it gets difficult. And I know that we're heading into that. So previously, Anthem was very broad. Most of the policies were PPOs, then most of the policies were EPOs. And now we're starting to see more counties pick up this HMO. And then it's going to lead into issues. So,
Right. Which our next question is, I think
yes.
now we're seeing, okay, great. We get through the first couple of steps of
Yeah.
congratulations, there's a surrogacy friendly plan. We're going to go
Yeah.
with the Anthem HMO, excuse me. And then now we're seeing when they get to those OBs, the OBs are saying, well, actually, we don't accept that policy. So what
Yeah.
risks are we seeing for surrogates that are currently enrolled in those Anthem HMO plans?
Yes. So finding providers is extremely difficult. While they may take the insurance, they each provider, each OB has a cap on how many of each policy they will take. So if that provider's hit their cap, they won't take that gestational carrier anymore. Um, there's also a dollar cap. So if they've hit their dollar cap with the other patients, they won't take them. So we're finding that it's very difficult to find providers that are open in conjunction with just finding providers that will take the HMO. It's been such a difficult insurance. And Anthem's been so difficult with it that a lot of providers are choosing not to be a part of that specific plan type anymore, which limits everything. And so, yes, we are having GCs that are into a pregnancy, well into a pregnancy, not having seen an OB yet. And that's from all aspects, not something we like to see happen or want to see
Right.
happen. We're really trying to push this idea of if you use Anthem, you've got to be well aware of all those risks that are associated with it and really should be discussing alternatives. At the end of the day, it is a decision that needs to be made. We just want to make sure everyone's super aware of what's going to happen if you do and understand what support you're going to need in order to work through those challenges that Anthem does currently have.
Right. And then I know we touched a little bit on why Anthem tends to be kind of the only choice or the only
Yeah.
standard traditional, insurance. So
Mhm.
if, because I think it's the most widely known, we have most intended parents
Mhm.
coming in and saying, this is kind of what I want to use, right? This is what I hear my other friends use, and it's through
Mhm.
the Obama/ACA program.
Right.
So if either the surrogate or the intended parent kind of insists on using Anthem, are there any
Yeah.
workarounds, any solutions in terms of like maybe changing providers or switching like a medical group or something like that, where maybe there's a different option to the Anthem?
So I would say that once you're in Anthem, you can switch medical groups, yes. I don't think we haven't found that it's alleviating all of the issues. So I would say that no matter what, you have to be up for the challenge that Anthem might present. I would say that definitely, again, exploring alternatives is going to be something that we just have to really talk through. Again, those medical groups, some of them are better than others, but you're not solving the full problem. You're just
Right.
moving maybe to a less problematic problem. I guess that's the best way to
It's a
say
smaller of
that.
the problems on the
It's a
problem
smaller
tier,
problem
right?
of the problem. Yeah, exactly.
Right, right.
Exactly.
So then in saying that, if you say, okay, Sarah, I'm listening to this and I don't want to use Anthem. I don't want my surrogate
Right.
stuck with, I'm paying for something that she essentially can't use.
Right.
And now we're well into the pregnancy and I just cannot get her in to see an OB. we
Yeah.
have a couple of different options that we touched on, one being
Mhm.
insurance plans with maybe carrying a lien.
Mhm.
For ACA plans, I think traditionally we're looking at something like a Blue Shield or a Kaiser. So can you kind of go into what a lien actually means? Why does it happen? What does that word mean?
Yeah. It happens because insurance companies are not nice. That's the nicest way I can say that.
Right. They do not want to
They,
help for free.
yeah, they're not the friendliest. Um, so it really, I mean, so Kaiser has had a lien. I've been doing this for 15 years, and Kaiser's had a lien the entire time. I have not seen a Kaiser policy, very, very rarely would I see one without it. Um, then in 2020, Blue Shield got the lien. I feel like it's an ailment that the insurance companies have now. But what happened was that Blue Shield got really burned by newborn bills, and they didn't want to cover surrogates anymore. And so, but they couldn't exclude it because in the state of California, you really cannot exclude surrogacy. They consider it discrimination. And so they opted to make the policy less favorable to the surrogacy community, which was to put in this lien. And what a lien does is that it creates a right for the insurance company to seek reimbursement for the medical expenses that they paid on behalf of the gestational carrier. And they seek that amount up to the amount of compensation. Now, they're not taking the gestational carrier's compensation because your contract with the gestational carrier is going to say you're responsible for medical bills. So
Right.
essentially, it's an additional amount that you have to pay. The insurance company looks at it as, well, she's doing a service, she's getting paid for that service, and we're covering all these medical bills. So we're going to go ahead and ask for that reimbursement of it. We use the term lien because they can put a lien against compensation. That's why we use that term. The
Right.
legal term for it and in all the contracts is actually right to reimbursement. And the only reason that they have that right is through contract. So in the state of California, you can write in a contract, I want to seek reimbursement because you have blue hair. And they could seek reimbursement because it in contract, they gave that right. You signed on to that contract knowing that was in there. Um, and that's where they get that right to do so. So it's not illegal to do, and it's not something that every insurance company does. It's not something in any kind of insurance code. It's just there's a contractual right that they have. And again, they're going to look at medical bills and seek reimbursement for those medical bills. And so one of the questions I get a lot is what happens if my surrogate's compensation is 60,000 and I have medical bills that are 100,000? Can they seek the full 100? The answer is no. They're going to seek up to the amount of 60. Now, I will say that there are certain insurance companies that will reduce down that amount where it becomes a third. Kaiser is one of those companies that reduces it down and becomes a third. So instead of seeking up to 60,000, they would seek up to 20,000, which can make a big difference. And again, even
Right.
if her medical expenses were $100,000, Kaiser can only seek up to that $20,000 mark. So a third of her $60,000 compensation. The other thing to note is that let's say that her medical bills were 10,000. That's it. They're not seeking 20,000. They can only seek reimbursement for whatever medical bills there were. So they can only seek up to that 10,000. So even if her compensation is 60,000, they can only seek up to that 10,000. They just can't exceed the cap. And that's what we're always looking at. And one of those things that when we talk about different policies, we talk about, well, what's that cap going to look like? What's that compensation for the gestational carrier? And what would that mean for you as an intended parent? And how do we kind of gauge that financially with you? Um, so that's kind of I know I talk about liens a lot, but that's kind of the long and the short of it, of kind
Right.
of where they came from, why they're allowed, and the kind of the amounts that potentially we could see.
Right, which kind of goes into our next question. I think we said a little bit, or we were wanting to ask about,
Yeah.
percentages and how that's calculated. So I
Yep.
think it's important to know it's going to come down to a couple things. Obviously, if you're using Kaiser versus something like a Blue
Hmm.
Shield, with how much they're
Yes.
allowed to ask for, and then
Yes.
secondly, your personal surrogate that was chosen, her compensation amount, and
Yes.
then lastly, how much did they spend in bills? That'll kind of just all
Yes.
feed into what's that final number that IPs are looking at for
Yes.
those insurance companies to be asking for
Yeah.
in terms of reimbursement.
And we usually like to tell intended
Yeah,
parents that, like, I think on average, we're seeing about $22,000 for a pregnancy, medical expense wise. That's about average. So when we're kind of talking through those numbers, and I love that you broke it down so easily, like you're going to look at the comp amount, you're going to look at how much medical
right.
expenses there are, you're going to look at the percentage and make it all work together. And we do take that number, that average number of maternity expenses into play as well.
Okay, great. Yeah, it's always great to, I think our biggest message is, listen, we can't get you a final amount until obviously we're at the end of it, but
Right.
ideally,
Right.
historically, this is the kind of number that we're looking at.
Yeah.
Somewhere around here, give or take 5, 10
Yeah.
grand.
Right.
Right.
Right. Plus or
Um,
minus.
so with a lien, I think we kind of also discussed into this. So how much should the intended parents kind of expect to deposit into that lien account just in
Yeah.
preparation for, when that bill does come? And then you touched on a little bit too on if the final bill is actually less than expected. Are they expecting some sort of like a refund, I guess, for whatever extra money was put into that lien account?
Yeah. So I am always of the mindset of especially with liens, that you should have the lien amount deposited in there. Um it's just a safety thing to make sure that the funds are there ready to go for when that lien comes in the door. The insurance companies don't like to play for their money. They don't want to continually ask for it. Um,
Right,
they get very aggressive when that starts to happen. And what aggressive means, it's not aggressive to you, it's actually aggressive to your gestational carrier. They'll call her, they'll email her, they'll hound her. And I think there's times where we just want to be able to have that money ready so we can look it over, agree to all of it, make the payment, so it creates, I call it like basically goodwill. We're letting them know, hey, we're ready to go. We just want to review it, because it always should be reviewed, making sure that
right,
the insurance company is seeking the right correct amount and not any more than.
right.
Um, and then pay them. I mean, that is a reality, that we're in a contract where everyone's agreed to do this. So
Right. And no one's
I
gonna
think,
forget about it.
yeah, they're not.
Yes.
And other reason to keep it in the account too is that in California, there's a statute where the insurance companies have up to 4 years to seek that reimbursement. And so if we don't have it deposited, it could be, 2 years later, they're asking for that lien reimbursement, and circumstances can change financially for anybody at any point in time.
Right.
And you could also be along your merry way and not anticipating this, and your child's 2 or 3 years old, and all of a sudden, Kim's calling you saying, "Hey, hi, we've
By the
got,
way, you owe me
yeah, by
20
the way,
grand.
we've got some bills." Yeah.
Right. Yeah.
So I know it's hard to have that money tied up, but it is the safest thing to do for all parties.
Perfect. Thank you.
Yeah.
And then we did speak a little bit about an alternative option
Yeah.
being
Yes.
the Lloyd's of London, which, at least for me on the non-insurance end of it, trying to still kind of grasp. I think I've got the lean under under like my belt that I could
Yeah.
explain that comfortably. But Lloyd's of London. So if you can kind of give us an overview of what that is generally.
Yeah. So Lloyd's of London is, we call it specialty maternity insurance. It is very, very specifically written for surrogacy. I love that, because there's not a chance of it not covering, which is always a
Right.
nice thing. Also, it's on the Lloyd's of London market, and the Lloyd's market has been around for hundreds of years. It's an AM best rated company, which means that financially it's a very, very solvent company, which is what you want in any insurance company. It
Right.
is located in London, but Lloyd's of London is actually a market. And so there's different insurers underneath Lloyd's. And so we have two insurers in our community that work and created these two policies that will cover maternity expenses. One of them is New Life Agency, and the other one is Universal Family. And they are the insurance companies underneath, I call it like the umbrella of the Lloyd's market. They are backed by Lloyd's, which means if they were to go away, Lloyd's covers the bills, which I like because you always want to know who's going to pick it up if somehow an insurance company says goodbye. Um, the other thing that just to kind of note on them is that it is costly. Um, but again, we're comparing it to potentially policies with liens. So we talked about this kind of round number of maybe around 20,000 if she had a 60,000 comp and it was a 33% lien. Lloyd's is going to sit more in that 30,000 range. So that's why we talk through it because we want to understand what is the better route to go. We can get the Lloyd's policy. You can get it year round. It is specifically written for surrogacy and it's going to be right around that $30,000 mark. So we had those conversations to look at, is that the best way to go? If her compensation is sitting at around 90,000 or up, then your Lloyd's may not be a bad idea. Or if for some reason we're in a policy where there's 100% lien, that's the option that's available, then Lloyd's is definitely going to be the better option in this. The way that I always look at it is that you have ACA up here, and then which has great coverage and it's financially great. We just have to depend on if we're in an HMO or an APL with Anthem. We know that.
Right.
Then next we go down and we're looking at our lien policies because there's still major medical insurance. They're great insurance. We've just got a higher financial cap on them. And then third on that list is going to be the Los Lloyd's policies. So we go A, B, and C is typically how we work this. So Lloyd's to us, and Lloyd's knows this. I tell them all the time, I'm like, you're my last resort. I love you so much, but you are my last resort.
Right. Thanks
Because
for
I
being on
want to,
board. You're just in the
yeah,
back of the
I
line.
really appreciate you guys. Thank you so much.
Right.
I do, but I do. I want to go A and B before I move to C, but
Right.
C needs to be in there. So again, and when I say 30,000, I mean there's a strong likelihood that you're going to be there. So some people are like, "Oh, could I come in at 15?" Not likely. So I always tell everyone really prepare to spend that 30,000 because that is likely what it's going to be for sure.
Good to know. Yeah, I think it's the first question is, well, how much is it going to cost? How much is this going to cost me? Right?
Yeah.
What am I
Yeah.
looking at? So I think even just having like a tier system kind of helps, them figure out what's going to work best.
Yeah.
So then speaking of tiers and prices and everything, so with a typical ACA plan, we're looking at like monthly premiums, right? We're paying
Yeah.
to keep that policy active. Are
Yes.
there similar premium systems for that Lloyd's of London, or are there premiums at all? Like, does that word even coincide in the Lloyd's of London world?
Yes. And I love that you're asking this because coming in 2026 and it's already been approved, so I'm really excited about that. Lloyd's is going to do monthly payments, very much like an ACA plan,
Oh,
which is new.
amazing.
You're hot off the presses, Kim. This is everybody here. This is hot
Right.
off the
Hey,
presses.
news. That's amazing. Yeah, because when I'm
um,
telling somebody they got to pay 30K up front, I'm like,
30K upfront, right?
that's your
You're
only
like,
option.
woo, that's a lot.
Right. People
Um,
love payments, so that's great
Right,
to hear.
yes, exactly. So that is something that's really wonderful is that is going to start. We're ironing out all the details on it of like how many months it needs to be, the amount that it will be, but it will be broken down.
Right.
I think we've decided a minimum of 10 payments, maximum of 12,
Okay.
just depending on where they are in the journey.
Okay.
So that is again something that's newer because Lloyd's, like you said, typically Lloyd's was right up everything up front by
Right.
confirmation of heartbeat,
Yeah.
30,000. Which is hard. That's hard to say
It
to
is.
somebody
It is,
when
right.
they're just at that space of just having a heartbeat. Like that's
Right.
so this is a little easier to digest now. So yeah, so that's we're looking at the, kind of, I guess you would take the kind of the 30,000 and let's say even dividing it out by 10. So you're looking at about 3,000 a month. That would include deductible, premium, kind of everything all inclusive would be in that amount.
Well, that's great news. Yeah, we love when insurance updates go in our favor. We don't like to
Right?
hear that it's the opposite, right? Yeah, that's great
Right.
news.
Right.
And then
Yes.
in terms of coverage options, so assuming
Mhm.
that probably goes into kind of your final overall estimate, right? Is there's technically different tiers of coverage that IPs can choose?
Yeah, so we have the policies are kind of interesting. So I tell everybody there's a base policy that everything kind of rolls off of, and then you can increase that. So there's a base policy of around 250,000. You can increase it to 500,000. You can go up to 750,000 depending on what you need. I have found, just this is completely anecdotally based on medical bills that I've seen, um, that the negotiated amount 250 tends to be a good level. 500 is absolutely sufficient. I mean, again, 15 years, and I have not had a bill exceed about 450. So that's negotiated. We definitely, the rack rates have come in high, and then you work your magic and you get it down. You have networks and all the
Right.
things
Hmm.
that's about where we've been. And so, but you can choose the 250, you can choose the 500, you could choose the 750. There's also different, and this will get really into the weeds, and I'm not going to do that because it can get almost too overwhelming.
Right.
There are different structures of Lloyd's. So depending on where you are in the year, there's different structures that might work. So typically, if we are transferring in this period and or kind of through the March timeframe, then we'll want to be what we call in a full Lloyd's. If we are going into something maybe a little bit later in the May timeframe, June timeframe, we have ones that are more pay as you go, where you don't have to pay everything up front. Because what we're trying to see is, could we possibly get an ACA policy on the back end next year? That may be an option. We never know what insurance will do. If we cross our fingers, everything works really well, maybe there's something that's there. And so we want to give you that
Right.
option. So Lloyd's then doesn't collect everything up front, and it's more as a pay as you go type situation, versus if you're transferring by March, you're likely having a baby this year. So
Right.
they're going to
Right.
ask for the full Lloyd's at that point in time.
Got it. So again, just kind of depends on timeline, what you're looking at for
Yeah.
due date, and then just taking everything else into consideration for what you
Yeah.
actually need. Yeah, because I think, when we're giving intended parents and just giving general information, they
Mhm.
said, maybe I had a baby last year and this was not the case at all. Or, I have
Yep.
two different surrogates and maybe two entirely different zip codes or states.
Yes.
Why are they
Yeah.
so different? And it's
Yes.
difficult to say it's just because of the way that healthcare works in the United States. I
I
don't know
know
what to
it's
tell you.
terrible.
Yeah,
I
yes,
tell everyone,
I
I'm
would
like,
let
we're
them know.
the most convoluted system here for sure.
Right, right. It's I give you information as I receive information from our lovely
Mhm.
sources like Sarah, and I can give you as much as I know, and then as much as changed this
Exactly.
year.
Exactly.
Um, so for the Lloyds, I guess if
Mhm.
you are at the start of your journey, what would be some kind of major circumstances that going into a journey you just know Lloyds is probably going to be your best bet? What
Yeah.
would be some like major
Yeah.
items?
So first off the top of my head is that if you are planning on having a delivery that is not in the state where the gestational carrier lives. So sometimes GCs may live on state lines. We might see that a little bit of times. Um, Sometimes legally it might be better to deliver in one state over the other. There's a variety of reasons why a GC may not deliver in her home state. But if you are planning on that, Lloyd's tends to be the better option. for it. Also, the other thing that we see a lot of is that if you are wanting really great flexibility in providers, or you want a specific provider that maybe is not in network with a surrogate friendly plan, then Lloyd's is going to be the better option for that. Um, it's they have a really broad network, and in some cases, you don't even have to be in a network. So it just gives a lot more flexibility with the providers, and also being able to choose where that delivery happens. Those are kind of the two things that we see the most that I would say are circumstances outside of just financial that can impact
Right.
that overall decision to go with Lloyd's. The other one, of course, is that you don't want to wait for the ACA, that you got matched
Right.
and you're so excited to be matched and you want to get started right away. And your surrogate doesn't have good insurance at the moment. And so we need to get our insurance, and you don't want to wait until January timeframe of next year. Um,
Right.
then we may want to do Lloyd's and get started sooner.
Right. Wow, thank you for that. And I think you hit the nail on the head with the state of delivery. So I'm sure, as you're aware,
Hmm.
many people kind of flock to California-based surrogates just because
Yeah,
everything else, legally, birth documents and things like that, tends to be a little bit friendlier to, intended parents obtaining a child through surrogacy.
right.
So for our intended parents choosing California surrogates that
Hmm.
are looking at these hiccups with, the anthem or the liens and
Right.
whatnot, how much additional funding would you say is smart for them to kind of plan for an alternative
Mm.
option, just to have that, you know, um, ready to go, essentially?
Yeah, I think that, I mean, to be safe, I would say probably 40,000 for alternatives if we're looking at that. When we talk with intended parents, we do talk through what that looks like, or even if you guys, like, if ACRC sent over kind of a profile, we could say this would be the approximate range. But I would say the $40,000 range is pretty, that should cover most policies that you would potentially get, whether it's a Lloyd's policy, or if it's maybe a policy with a 33% lien, or it's just a regular ACA, that should be sufficient to cover that, either any one of those three.
Awesome. Yeah, that's good to know, because I think you start initially looking into what is the surrogate's compensation, right? That's kind of like the big number that
Yes,
they're like, well, I can only
yes,
pay her this much. And then you get all the other fees, well, plus insurance, plus, all the
yes,
medical situation, all the
yes,
legal. So just
yes,
knowing what that number is going to look like for the care of the baby and the coverage of the
right,
pregnancy is good to
right.
have pre-planned for. So thank you for that. And
Yeah,
then for our intended parents that are maybe looking at alternative options if they're not choosing a California surrogate. Have you seen
yeah,
any other states that are a little bit more lenient in terms of like options for surrogacy friendly ACA or anything like
yeah.
that?
A lot of them, guys. A
Yes,
lot of
yes,
them
tell us which
are.
ones, which are
Yeah,
alternative options.
Nevada. Yeah, Nevada is a great state. Um, Tennessee, Florida. I mean, really, it's almost like, what are my problem states? And then everything else is pretty open in regards to that. I would say that Ohio is a good state. I know it has a lien in there, but I've got a lot of different options there. Um, I would say Texas, but we're just dealing with so much stuff there that I don't know if that's the wisest,
Right.
but insurance wise, it's nice. um,
Again, one problem over the other. Which
right. I'm
one?
like, there's always something going on in this
Right.
community.
Right.
I mean, Minnesota is good. We've got, I'm trying to think where else. Colorado tends to be pretty okay. So we've got some good states that you definitely could look into. Oklahoma, even though the abortion rules are terrible, but it actually, insurance wise and surrogacy wise, is a good state. So yeah, there's options, and they're good options. They're things where we're finding some really nice policies and getting people enrolled, that will allow you to access those ACA policies versus having to do something different. So absolutely. I know California is a great state, but I would venture to say that there's others that have great the laws have been improved drastically. um, and definitely insurance elsewhere is unfortunately better than California.
Yeah, no, I don't think unfortunately. I mean, I think historically California has been kind of like, I mean, the nickname,
Yeah.
right? Golden state for surrogacy,
Yes. 100%.
legislature, insurance, all of that. So I
Yes.
think that's the more
Yes.
traditional route that people tend to go to. But yeah,
Yes.
just even, discussing like, is there a different option?
Yeah.
There's plenty of wonderful women I think that we can find all over the country that are willing to do
Wonderful
this.
women.
So yeah,
Wonderful
if
women.
your biggest hiccup is insurance and just making sure we can find something, I think within
Yep.
your budget, different state might be great.
Yeah. And there's, like you said, I love that you said that they're wonderful women. I was on the phone last night until 11:40 my time working with a gestational carrier in Florida, getting her insurance. And she was so wonderful just talking through. And we talked
Yeah,
about our child. And so there's just wonderful people everywhere who want to be surrogates. And
right.
yes, insurance is better outside of California.
I always tell people everything's expensive in California. The rent
Right.
is expensive, the insurance
It's
is
true.
expensive. We got to look at some other options, guys.
Alternatives. Yeah, absolutely.
Right, right. And I think we kind of touched on some of the states that are similar in terms of hiccups with insurance to
Yeah.
California, right? That's I think you mentioned a couple,
Oregon,
but if we can, yeah,
Washington, and Utah are probably my three right now that are pretty difficult. My West Coast.
right. Well, I'm telling you, people move here for the weather, and then it's hiccups with everything else.
Yeah, yeah,
Okay, amazing. So just always good to kind of I think bounce off the state also with, maybe a consultation with you guys as well just to see, these are the
yeah,
states I'm looking at where I have some surrogates available. Insurance wise at least, what is your opinion on flexibility with getting into
yeah,
a an insurance policy that would work for me?
yeah.
Okay, perfect. So this is, I don't know if you can answer, you have an opinion.
Sure.
For intended parents, would you personally still recommend using a California surrogate as like a first option? If you feel
No,
comfortable touching on that? No.
I wouldn't. I love my California GCs, but I think that there are wonderful. Like I said, the laws now have really, there's been so much cleanup in laws across the US. That and there's great clinics and there's great attorneys and there's great insurance, and so I would venture out. I think California is wonderful, and like you said, it's been the golden state. um but there are some wonderful states that definitely would be just, if not probably better than California. So if I were going through the journey, I probably would not use a California surrogate. Mainly because
Right.
maybe honestly, just mainly because of insurance purposes, I probably would go somewhere else a little bit different.
Right. And our closing question was just kind of, for intended
Yeah.
parents with a limited budget, what some
Yeah.
alternatives would be, which I think we touched on pretty well. It sounds like, there's always additional options aside from just ACA, and then looking into
Yeah.
surrogates outside of the traditional friendly states. Yeah, not California.
Yeah. Yeah. I think honestly that's what it would be. I think we would take a look at that and kind of, and that's why I think, as having an agency like ACRC is so important, because they're going to discuss that budget with you and really try and work on finding that beautiful match that's going to be within that budget so it doesn't feel straining. And then our job, of course, is to find the insurance that matches that budget and make sure that we're all on the same page and moving forward in a way that feels very comfortable for everybody.
Right. Yeah, well, that is amazing. And I don't see that anybody wanted to raise their hand. Yeah, we don't have faces. So if anybody does want to ask a question, please, it'll just be text. Um, don't see we have any. I'm sure they'll trickle in afterwards. If anyone does have questions, we'll go ahead and provide some options for where to send those. Thank you again to everyone who joined us today. Sarah, thank you so much. I know you are in the height of your open enrollment, so we do appreciate you being able to give us a little bit of time and just talk with our intended parents about all of those fine questions. We hope today's webinar gave you also a little bit of a helpful insight, answered some of your questions, and most importantly, reminded you that you are not alone on this journey. Our entire team, including Sarah and her lovely, amazing team at Art Risk Solutions, is here to support you every step of the way. So we do have a couple of social links. Obviously, our phone number, if you are a little bit more traditional, all of our socials listed down below at ACRC Global, our standard informational email, if you would like to send us questions, want to schedule a consultation, anything like that. And then, of course, our website, if you just want a little bit of standard information. And then, Sarah, do you want to share any socials or anything for Art Risk?
Sure. So we do have a great Instagram page that actually it has a lot of information on there. We try, it's not fluffy, actually, it's actually pretty information heavy. But we love it. And so that's going to be at ART period risk solutions. So that's our Instagram. And our website is www.artrisksolutions.com. That's another great place to also kind of tool around. Um, and yeah, so we are always happy. And then we have a contact form on our website that go ahead and fill that out, and that comes directly into us. And then depending on kind of what your needs are, we'll connect you with the right person at Art Risk. You're also always welcome to call in as well. We have our phone number is 661-257-6242. So any way you want to connect. I always laugh because we get messages through Instagram too. We get messages through Facebook. Those get answered. So any way
Right.
you want to connect with
Right.
us, we're happy to connect.
Send us, send us. We have someone to talk to wherever you reach
Exactly.
out. Well, again, thank you so much, Sarah. You were a pleasure as always. We appreciate picking your brain and just making insurance a little bit more digestible for the day-to-day person. Thank you so much for taking the time to be with us today. On behalf of all of us here at ACRC, thank you everyone again for joining us. We wish you all the best on your path to parenthood. Take care and goodbye for now.